Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Tuesday, and we are at the 29th of June, 2021. All right, markets finished nice. Remember, tomorrow's the last trading day of the half year of the month. Gets to be very interesting from there. We're very much right now in that pattern of holding for the jobs data reports. You know, we're going to get the API number for private payrolls coming out. I think Challenger will be coming out this week as well. And then, of course, Friday, it all gets culminated with the U.S. jobs data. Now, I want to remind everybody before we go too far here that if you look up over here, there's going to be on this a dot, an icon. If you click that and want to come to my Wednesday, that is tomorrow, my 12:30 p.m. Central Time, What's Up live webinar, that's what you got to click. You have to register. The invite will be sent to you. I open at 12:15 so that you can write me questions, but I really prefer you write them ahead of time to me at linnllc.com. Why? I can prepare the charts and we just fly through it like that. It's much harder if I don't do that. All right, so that's what I'm seeing in the markets. Now, if we take a look at how ARK's been doing, this is a runaway market. Now, if you look here, did we have a gap in the chart? And I just do this. If we take a look right here, this is the day I want to go to. This high is 123.88. Market breaks away from it, pulls back, comes down on that break low to 124.03. You can see that there. Then gaps again. So you have a breakaway and now a runaway gap, okay? Got to always pay attention. You get exhaustion gaps from that too. But this just shows you, here's a market that got down so out of favor, and here's a market coming up dramatically. It really sliced through this resistance. Very, very strong chart. And when you look at the trend, certainly to the upside, it's been that way for a long time with higher lows, higher highs. The market had a bullish crossover just the other day, and I was pointing this out to you right here. It's going to happen the next day. This was Monday. This is now your bullish crossover part on June 29th. And with that, now that adds fire to this market because moving average people look at this. There's something else. If this average gets over the 100-day in green, you then have the shortest term average, which we'll call the 18, over the 100 and the 100 over the 200. You'll salivate if you're a moving average aficionado of this because you fall in love with those patterns. You also have what I call the Gorilla Glue pattern. You've been hitting this upper Bollinger Band just almost every day for a week and a half, 2 weeks. You can see that. That is just a power move. Notice it doesn't get over it and stay over it. It pulls back to it. Exactly what bull markets do. And if you look at momentum, you have an embedded reading. So on breaks in this market, support should come in now at the 100-day average until that red line that makes up the slow stochastic close under 79. I still have to stay very much in the bull camp. BBEU, this is the European stocks, and there's so many analysts out there betting that European stocks will catch up to American stocks when and if they have their COVID under control there, and that is the problem. This new variant is very serious. A lot of the countries are getting in trouble from it. And it's amazing, though, if you look at Italy and other countries, there's a group of them, they're actually beating the American pace for the first vaccine shots. That's impressive. We got way up, and all of a sudden there's pockets in America, many of them, where people just don't want to get the vaccine. I have good friends that don't want to get it, and I don't get the thinking. But that's me and that's theirs. I respect their decision to not get it. But I told them with these new variants, you got to be careful because when you do get it, if that's what happens, because you're not vaccinated, it's worse than the first variant. That's what they want to do. And we're saying that, not only me, ask your friends, you'll be surprised. But oversold, should the market eventually get back here over 59.51, it's only 46 cents higher. If that happens, I think the market negates this downtrend finally, but it really needs to get a close over 60 to get more bullish. PAVE, the battleground's shaped up at the 18-day average of closes. Now the president is traveling the country trying to build support for the program he supposedly has agreed to with that group of Republicans. But his problem is bigger than that. He's got to get Nancy Pelosi to get her people to vote on it. You know, there's only a 4-seat lead going on in the House. You need to get a big number to vote. And of course, in the Senate, you got to make sure you have all the votes. Just because we had a group of senators agree with the president doesn't mean it's a fait accompli. In AMC, I don't get, when I read everything on the results for Fast and Furious, I went to the show Sunday. And I am a fan of that franchise. It's not real. We all know it's a lot of fun, but it got too crazy in this one. I gave it a thumbs down, to be honest with you. And you may not agree with me. You'll say, well, people liked it. I went to a show at 12:30 p.m. Sunday. It should be about 200, 250 people in this movie theater that I was in. It's the IMAX type. There were 15 of us. You think that's a sellout? Lower highs, lower lows, fighting at the 18-day average of closes. XSD, as I look at the market, over the upper Bollinger Band, sideways action, breakout time. You're probably going to fight now to see if you can get the embedded reading and even kick the market higher. There's a lot of good things going on overall in these charts. Podex did what we thought. It went to the lower Bollinger Band, held, came back for a move to the 18-day average and slipped. But it's too oversold, I think, to attract new sellers. In fact, any close on over 1459 could actually turn the trend up. You'd have higher lows at that point, higher high over that, and you could be looking to get back up to the resistance points there. In ESGU, we are looking at MCI, USA, ESG focus groups, and they are moving up, and you can see you're starting to get your embedded reading developments there as well. That's all bullish parts. In energy, I just saw the API number. Wow. A whopping decline of 8.2 million barrels. That is huge. Now, that's not the net number. The net number is closer to 5 million when you take in distillates, which build a little in gasoline, but it's still a big number. They're looking on the EIA number tomorrow of about a 3.6 million barrel decline. And OPEC's committees met today, the technical committee. You didn't get too much information out of them. Thursday's the OPEC meeting, and that's when we'll see what they want to do. They're talking about what do they do when the current plan runs out in July. Are they going to increase more production? Or they're going to try to jam prices higher. They have to figure out what's their way of doing it because they're in control of it right now, not the marketplace. They are. Lower highs, lower lows, prices shooting down. Emerging market ETF, they haven't been alive in a while. That's what I'm saying. When you went and you looked at that other stock of some of the other European stocks, you're just not getting it yet. You've got the trend up, the bias down, and you're flattened momentum. GLD, it broke apart, and I was telling my traders in my written research, I have been bearish these markets in the metals, that the charts just look real ugly. Could you be headed towards that lower Bollinger Band? Yeah. Now this 100-day average looks like a heck of a lot of resistance, and I'll tell you what gets scary. If this 18 travels down, just like I was talking bullish before in one of the other markets, you'd have it under the 100-day, that underneath the 200. That would be one heck of an ugly picture. Gold miners, a bearish cross today, came in. Not a death cross, but a crossover. The 18 under the 200-day average with an embedded reading. Still very much to the downside. I want to explain something to you, too. You know, charts go up and down. Not a lot of ETF traders that I know or spiders go short these markets. I think you realize that. What my work does is it keeps you from buying them. And that in itself is what it's about. When you're under that 18-day average of closes and the bias is down, you don't have a reason to buy. And I know you're going to say, oh, I can buy it there and it's going up. Sure you could. But the market's been telling you not to be long. That is the importance of all this. And that's what I try to do in the mornings when I put out these videos for my paid subscribers. I'm really gearing them right where I want them to be, and I am saying buy here, sell there. And in the SPDR ETF, I'm always saying, I realize you might not want to be a short seller, and I get it. There's nothing wrong with that. But it's also telling you not to own it. That in itself is good information sometimes. I get wrong, that's for sure. Lower highs, lower lows, which is a downtrend, bias up, and momentum flat. Do you really want to own any of this going into all these job reports? I'll let you figure that one out. FXE, this is not looking pretty right now. The market had lost the embedded reading pattern. It should have gone up here, and instead it's breaking through this low. If it gets under this low, this chart gets really ugly. I'd then be looking back here at the 110.20. So I think you're at a very interesting point on that chart. So you put it together, you try to come up with ideas, and that's why if you trade futures, spiders, ETFs. By the way, if you're a spider ETF trader and you're trading QQQ and DIA and SPY, you do realize you're just back-ending whatever the futures are doing, because that's what it's based on. Those funds have to buy those futures contracts in order for this to work out, and that's exactly what they do. So when I put out my morning videos, the combo's phenomenal, I think, because at 5:40 a.m., I'm telling you what's going on in Europe, Asia, what I see for the U.S. coming up. I'm going to give you all that news and a lot of technical analysis. Then at 8:40, many of the U.S. reports have come out. I update you with them and show you what's going on. I'm covering about 40 charts on both. It's more than 34 now. We're up over 40 on the ETF and the spiders. And if you like what I do, you're going to hear me say, I want you to buy at the market. I want you to put an order here. Here's where you're wrong on that trade. Here's the profit objective for where it goes. It is ultra specific. All you need to do to find out more, go to our website. Under the keyword on the top of the site, research. Away you go. You can call my staff. They'll get you set up in 2 minutes. I'm Ira Epstein. You have a good day. Remember the What's Up live webinar tomorrow. I'll see you all. It starts 12:15. I open it up. Take care.